So where does that leave us? Look, I'm not saying AI is worthless. I'm not saying these companies won't succeed. What I'm saying is the current valuations embed expectations that are almost impossible to meet. And when you pay prices that require perfection, you're setting yourself up for disappointment. My approach hasn't changed in 70 years, and it won't change now. I invest in businesses I understand at prices that make sense with a margin of safety. Right now, AI stocks meet exactly none of those criteria for me. Can I prove I'm right? Number. Maybe this time really is different. Maybe AI will grow fast enough to justify current valuations. Maybe every one of these massive capital expenditures will generate appropriate returns. It's possible. But I'm 95 years old, and I've heard this time is different more times than I can count. And every single time, it wasn't different. The fundamental laws of economics and human nature don't change just because the technology does. Here's what I know with absolute certainty. If you lose 50% of your money, you need a 100% return to break even. That's mathematics, not opinion. So my first goal is always capital preservation. Right now, the safest thing Berkshire can do is what we're doing, sitting on over $300 billion in cash and short-term securities. People criticize me for not putting that money to work. They say I'm missing opportunities. Maybe I am. But I sleep well at night knowing that when this market corrects, and it will correct, Berkshire will have the capital to take advantage of the opportunities that emerge. We'll be able to buy wonderful companies at fair prices when others are forced to sell. That's not exciting. It won't get me on CNBC, but it's what has worked for me for 7 decades, and I see no reason to change now. The AI revolution is real. The bubble is also real. Both things can be true at the same time. Your job as an investor is not to predict which AI company will win. Your job is to protect your capital and position yourself to profit regardless of what happens. And right now, the best way to do that is to be patient, be selective, and be willing to sit on cash when you can't find investments that meet your criteria. As I've said before, the stock market is designed to transfer money from the active to the patient. Right now, there's a lot of activity. There's not much patience. I know which side of that equation I want to be on. The AI bubble will burst. I don't know when, and I don't know what will trigger it. But I know it will happen because every bubble in history has burst. And when it does, you'll be glad you listened to an old man from Omaha who's seen this movie before. Stay safe out there. Look, I'll end with this. 25 years ago, people called me a dinosaur for not investing in internet stocks. They said I didn't understand the new economy. They said I was too old, too conservative, too stuck in the past. Then the market crashed, and Berkshire stock price doubled while the NASDAQ lost 78% of its value. Suddenly, I wasn't a dinosaur anymore. I was a genius. But I didn't change. The market did. The same thing is about to happen with AI. Right now, I'm the old man who doesn't understand artificial intelligence, the skeptic who's missing the biggest opportunity of the century, the cautious investor who's being left behind. That's fine. I've been called worse. But in a few years, maybe sooner, maybe later, we'll look back at 2025 the same way we looked back at 1999. We'll shake our heads and wonder how people paid such crazy prices. We'll marvel at the speculation, the circular financing, the irrational exuberance, and the investors who preserved their capital, who stayed patient, who refused to get caught up in the mania. They'll be the ones positioned to profit from the opportunities that emerge from the wreckage. That's where I plan to be. I hope you'll join me there. Thank you, and God bless. From Ben Graham, 70 years ago. Price is what you pay, value is what you get. And gold, well, gold gives you nothing. I know that sounds harsh, but stick with me here. When you buy a farm in Iowa, you get corn and soybeans every year. When you buy a share of Coca-Cola, you get a piece of a business that sells billions of beverages and generates real cash flow. When you buy a U.S. Treasury bond, you get interest payments. But when you buy an ounce of gold, you still have an ounce of gold in 10 years. It doesn't grow, it doesn't produce, it just sits there looking at you. Let me paint you a picture. Right now, all the gold ever mined in human history, every wedding ring, every coin, every bar in Fort Knox, would form a cube about 68 feet on each side. That's about the size of a baseball infield. At current prices, that cube is worth roughly $19 trillion. Now, for that same $19 trillion, you could buy all the farmland in America, 400 million acres, producing $200 billion worth of crops every year. You could buy the 20 most profitable companies in America, businesses generating hundreds of billions in annual profits. And you'd still have trillions left over for a cup of coffee. Which would you choose? The inert cube that produces nothing, or the productive assets that compound wealth year after year? Anyone watching from Mars would scratch their head at humanity's choice. But here's what's really happening in 2025. Gold isn't rising because of its intrinsic value. It has none. It's rising because people are scared. And when people get scared, they do irrational things. They're scared of inflation, even though it's actually been coming down from its 2022 peaks. They're scared of geopolitical tensions, even though we've had those for decades. They're scared of central bank money printing, even though the Fed has actually been tightening. Fear is profitable until it's not. Look at the data from the World Gold Council.